Another day, another story. Investing in the stock market can be a great way to grow your wealth over time. But with so many different stocks to choose from, it can be difficult to decide which ones to invest in. One factor that many investors consider is whether or not a company pays dividends. In this script, we will explore why dividends are important in the stock market. First of all, let's define what dividends are. Dividends are payments that companies make to their shareholders. These payments are typically made out of the company's profits and are distributed on a regular basis. Some companies pay dividends quarterly, while others pay them annually or even monthly. So, why are dividends important? Here are a few reasons. Income generation. Dividends can provide a steady stream of income for investors. If you invest in a stock that pays dividends, you'll receive regular payments regardless of whether or not the stock's price goes up or down. This can be particularly appealing for investors who are looking to generate income in retirement or who want to supplement their other sources of income. Stability. Companies that pay dividends tend to be more stable than those that don't. That's because in order to pay dividends, a company needs to have consistent earnings and cash flow. This means that companies that pay dividends are less likely to experience large swings in their stock prices, which can be reassuring for investors. Long-term growth. While dividends provide income in the short term, they can also help to drive long-term growth. That's because companies that pay dividends tend to be more financially disciplined and focused on generating consistent earnings. This can lead to steady growth over time, which can be reflected in the stock's price. Shareholder value. Finally, paying dividends can be a way for companies to create value for their shareholders. By returning profits to investors, companies show that they are focused on generating returns for their owners rather than simply pursuing growth for growth's sake. Conclusion. In conclusion, dividends are an important consideration for investors who are looking to invest in the stock market. Dividends provide income, stability, and long-term growth potential, and they can also be a sign that a company is focused on creating value for its shareholders. While dividends are not the only factor to consider when investing, they should definitely be on your radar when evaluating potential investments.